Hi, today I'm going to explain how I find high probability trades, avoiding mistakes that cost hundreds of dollars to new traders. The daily chart. I'm sure you've heard about it many times, but for a good reason. This chart holds the best amount of information that can protect you, or either harm you, only if you neglect understanding it. The daily candle has only two aspects of its true nature and its behavior. It has expanded, making further expansion unlikely to continue during high volatility drivers. High volatility drivers, by the way, are the 9:30, 10 a.m., 8:30, those a.m. opens by New York time. Then, it has yet to expand, making it a high probability chance that we might catch the exact moment the expansion might happen. But another crucial detail, and not less important, is its equilibrium. The equilibrium matter for the previous days, meaning if Tuesday opened in respect to today's equilibrium, we are interested in participating. Otherwise, we skip that day waiting for better conditions to arrive. If you want a more detailed explanation of this concept, make sure to check this video on my YouTube channel. Now relevant swings. This is also a topic that I've made a video before, so I won't be explaining it in this video because it doesn't really make sense. But, if in short, these are basically the highs or the lows that swept liquidity, closing inside the range. In other words, they are manipulation. As a general rule, price shouldn't return to them in the near future, because they're protected swings at this point. Therefore, the stop loss should be put on them. Not really on them, but a little bit above or below the high or the low. Therefore, I will show right now an example of June 3rd, 2026, a trade that I took on ES. So with this trade today that I took, this is January 3rd, right? Right now we're in ES. This trade was pretty basic, to be honest. At this point, wait, let me change up my camera. Yeah, right here. All right, so basically, we had an SMT here. This is also protected. This is also protected high or relevant swing, how you want to call it. Those are basically the same thing. It doesn't really matter, to be honest. So since this is a protected swing, I do not expect price to return to the swing, right? Therefore, I'm very confident that this will displace below, and Nasdaq is not going to take it out once more and basically make it how to say, reverse the things, so reverse the asset strength. So at this point, I'm pretty confident that this is going to displace lower, but then I need the confirmation. It's always the same thing that I'm teaching in these videos, to be honest. If you don't understand this process, it's because you didn't really want to. So we're looking after that for daily profiles, right? So we have midnight open. Nothing really happens here, to be honest. Then we have the displacement aka changing the state of delivery. I'm very confident about it, so I'm looking for some kind of continuation signature, and I had it, right? I'm looking for protected highs at this point because I want to trade below, right? So what happens here? Do we have a protected high here? Yes, we do, because we just entered a fair value gap. This is a protected high, aka relevant swing, so keep that in mind. It doesn't necessarily need to always sweep a high or a low. It can also go into a PD array. So this is a protected high at this point, and I'm very confident about it, right? But we are on the 15-minute chart, and it's already 9:30, 9:15 or whatever, and I'm looking for positions in this. So not only on the intermediate time frame, that's a protected high. On the lower time frame, it's also a protected high. Why? Because we've swept a consolidations high, right? We see price consolidating here. We swept this high. This is a protected high. Cool. Right after that, 9:30, basically did this manipulation. So I'm looking for continuations on the lower side. We see that we closed back inside the range. Now now with this, changing the state of delivery, I'm pretty confident that this protected high will hold. Then I enter my position with the stop a little bit above the high, a little bit above it, focusing on a 2RR entry. But then I noticed something far away, not very far away, but you can guess it. This low, this is also protected low. Why, you might ask? Same thing again, we have hit a fair value gap, aka PDRA, which means that this low is now protected. With that in mind, I'm going to put my TP on that protected low, and that's pretty much it. That's pretty much the trade, and you see it executed flawlessly. My stop, price never edged my stop like it usually does for traders, so it's a pretty legit thing, relevant swings and protected highs and all of that. So if you want to get stopped out less, make sure to learn this stuff, specifically this concept. It's going to help you out. It helped me a lot, so there you go. So to wrap it up, you need your daily candle, which has to have rules associated to it. The sessions have to be aligned accordingly so that they're high probability. And then you trade accordingly to high volatility drivers. The process is very simple, as you've seen. The daily candle determines your day, use it to your advantage, and then you use another thing to your advantage, which are the relevant swings. And afterwards, the process remains the same as you know. Well, if you know me, you know. If you don't, well, you're welcome to join my community, which I post daily bias, and then you can learn from me. Ask any questions, I will always respond, if they're not stupid. So, have a nice one.